trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to look at a few markets here before Jeff Hughes comes on. He'll be our guest today. On Monday, we got somebody new and special, one of my favorite hockey pucks from the good old Olympics. Mr. Jack Hughes of Beanpot Financial will be on, and he's a heck of a technician, folks. One of Mark's good friends, too. Okay, now let's move on here with the Dow Jones. You'll notice here today the Dow Jones actually made a high from where we topped in May. It's a massive blowout. It went 6 ticks higher than the high back in here, and so far it's dropped 150 points from that level. I don't know if that means very much or not, but when we were looking at that happening, we were watching what the AI was telling us, and you said, it looked like it was headed down, and so that one's working okay. We'll be doing these kinds of things on Friday. Now, let's take a look at the gold market here. I got to do S&P first because that was another one that was a really nice one. See, here was the same situation that we had in the NASDAQ. The S&P number was 5690. The high was 56.96, and it's now trading 60 handles under it. You notice these little rallies that are here. Each one of these is 382 off of these. You can do the work yourself, and you'll see. And there's your first ABCD pattern of the day right there, up there at 56.50. And here it is, moving to the downside. So hopefully this will be the kind of day we'll have on Friday. I think we're going to have a rock and roll day because the grains are still under great duress, and there's a big report coming that day. But we'll trade things other than the grains, of course. We'll be looking at the euro and everything else, along with the NASDAQ. And not the NASDAQ. We'll look at the NASDAQ, but we will not trade that. Here was another one that was a beautiful trade both ways today. Here is the soybean oil, folks. You'll notice we had a higher bottom right here coming in. That led to a beautiful pattern right here. And it went up to almost the exact ABCD. We're going to draw these in. So whoopsie daisy. So we can see where they are. There's your AB leg. There's your CD leg coming in right there, 46.71. And it's already dropped almost $600 from that level. Now, we made a lower down. You can see the ABCD that we had here. Now, this is a smaller 135 pattern. Then we come down, we make a low here at 45.48. But you'll notice here that this has been a much higher low than back in here. So this has been the one that is, if it turns, this will be the one that turns. But boy, the way it's acting today, it's not turning very well. The other one that big surprise with that number that came out. We were watching these bonds. We're very, very bearish at bonds, but they got a big kick in the rear end from the report from Mr. Powell again. Get this up here so we can take a quick look at it. Yes, they did. They certainly did. There's a 30-minute. We'll get this up here and look at this on the daily or 4-hour, I believe, what we were watching. Yes, I'm sure. There it is right there. We thought it was going to stop right there. Of course, that's where our stop was going to be, and of course, it took it out when the report came out, and that was it. That's a 135 pattern, setting right at the 61% retracement. And then the one that is very interesting, you see here in early July here, this was the 135. So if it gets above here, folks, it looks like Mr. Powell's going to get a little relief on selling the bonds, but interest rates, they're not going to go much lower, folks. They got to sell these bonds, and the only way they can sell the bonds is to price them so that people want interest, and that's what's going to have to happen. Same thing happened when Carter was elected, okay? Now, I've said this several times. I'm going to say it again. Back in 1973, on August the 8th, Mr. Nixon resigned, and the market dropped 50% over the next 6 months, making that 3 drive to a bottom pattern. I'm not saying that's going to happen now. All I'm saying, this market is very, very, very overbought. I mean, it's overbought by any of the wildest imaginations anybody could ever get. Now, I asked a question the other day when I sent the video out. Is there anybody that's, looking at a potential top? And there was, of course, I got the thing from Bert Dolman today, but someone sent me this last night by email. I don't know who the dude is. It's from TradingView. Oh, here it is. His name is, I don't know what it is. It says Own Risk Research Fractals, the Roaring 20. Anyway, this is what he's looking at here. The problem is this went up and made a new high. Okay, this made a new high. I don't know. This is for Wednesday's action, and I'm trying to understand. Oh, he's looking at 2020, 2021. What happened? What's happened today is we matched that high. Back in 2021, we did this, and he's saying this could possibly happen right here. And I really do believe that could happen because there's a lot of things going on in the world that could make it happen without any trouble at all. So we'll have to wait and see if that's going to happen or not. But anyway, I went through all those Magga stocks that we were watching. One other thing that Rich Anderson said that I think is important, you'll see here that this is the lowest level we've had where only a few stocks have been running. In other words, S&P 500, most of the stocks have been going down. It's just a handful of stocks that have been going up. That's what Bert Dolman was showing in his thing, and that means something, in my opinion. And of course, if we take a quick look here and go back, let's pretend like you're an old timer, and we're going to go back and look at the, hold on here a second here, we'll look at the Dow Jones Transportations, and you'll see there's absolutely nothing bullish about the Dow Jones Transportations. We are making new highs today in the Dow Jones Industrials. And here's where we are. We're coming just back to the 382, which we've hit 1, 2. This will be the third time that we've hit it. So that's going to be some pretty stiff resistance. And look at the divergence here, folks. I mean, that's just a huge divergence. The Dow Jones Transportation should be off the top of this page, and they're not. That means they're not moving goods very much. So we're going to find out if that's going to be correct or not. Okay, now what we do is we're going to, when we come up to got one other thing to cover here. Hold on. We come back from the break. We're going to be looking at we're going to take a look at the grain markets, but I wanted to bring the crude oil up to you today because we had a very interesting pattern forming in the crude oil. This was the early morning move. There was the bottom that came in. This was pretty much spot on. You'll be able to see the ABCD that was there just about exactly. There's that high back here. The ABCD actually was right here. Let me draw this in so we can see it. Shut the front door, razor in. There's your AB. There's your CD leg. It came right in pretty much exactly where the AI thought it was going to. It went up and had a couple of nice trades in through here. We'll be using this on Friday because I can show you how to do it yourself, but it's not as accurate as when you're doing it with a computer where you've run 220 bars of 2-minute charts over a 30-day period, figuring out what happened on day 1, 12, 27, 56, and 54, whatever they are, and it gives you a prediction what's supposed to happen for the day. But that's what we're paying attention to here so far today. Let me see how we're doing with time. Oh, we're already started. We'll be right back, folks.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, education educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I'd like to go over some Magga stocks with you. I don't trade stocks, but this is what the index is made of. You can see here we've made the 1.618 on the long-term weekly on Google. The ABC measured to 195. I got to 193. Let's move on to the next one. This is NVIDIA. Now, NVIDIA, of course, is the big daddy rabbit, and it has really, you can see it had a nice rally starting today, but it's given all of it back, and it stopped exactly at the 78% level. And if you're an ABCD aficionado like I like to be, there's your AB leg, there's your CD leg, and that comes in right there at 133.5, and the high was 195.4. 195.96 was the high, and that was the exact 786 of the high back here, and it's trading at $13 under the gun. Okay, now here is Meta. This has been in a big move, had a heck of a run, and it's also reversed. It's reversed it's reversed the last 3 days' action. Everybody that bought it here below 512 was going to have an action. This is not good action in the stock market, folks, in these Magga stocks. Now, this is Amazon, which is a little squirrely because of the splits and stuff, so I got to move this around a bit. And you can see Amazon also had the big ABCD up to 200. The high was 200.55. It was supposed to be 200.25. Well, that one was off quite a bit, so we won't count that one as a good one. Okay, tongue-in-cheek, Larry. All right, here's the SMCI, which is semiconductor dudes. This is supposed to be leading the pack. It's not leading the pack. As you can see here, we got lower highs coming in here now. We had a little 7-day rally that didn't go any higher than the 618. This one's also looking a little tough. And here is the old Tesla. It was strong this morning early, as it always is. I don't know, but then it's reversed. It's actually dropped $26. We took out the high back here. The trouble is with the splits, I can't go back far enough, you see, to see if that was anything, because I don't have any ABCDs in here. But this is not good action, folks. That's really, especially coming with everything else here. Here's Mr. Appel, who's been down by the well. That's been extremely strong. Remember, it broke out above this 220 level, and it just, took a big rocket ship up here. Let's look at it a little closer here. It looks like we might have made an ABCD right here. Yeah, sure does. Let's take a look at old There's your AB leg, right? Just a minute. That doesn't work. We're going to draw it in like I do at home. We're going to just draw it in like this. And we'll just clone that line and put it right over the top and see. That should have come in at 233, and the high was 232.74. Well, that one didn't work either. Okay, let's move on to the next one here. This is a softie. And it's had you can see that it's had a butterfly pattern up here. There's the 1.618. It's now trading below the 1.618 of this move. That was at 40. 63.57 is trading below it right now, much like we're doing in the S&P. And here's Broadcom. Let's just see if that rally stopped exactly at the 786 nickel to a donut that it probably did. So let's go from the high down to the low. Went right between the 618 and the 786, right up in here. These are not looking good right now, folks. All this means is they probably have a correction. How much of a correction, I don't know. But what we're going to do now is we're going to take a look at the grains here on a quick basis. Now, we've got the report coming out tomorrow, so I'm probably not going to be doing any grain trading unless it's way outside the range where I don't think things can go. But the way they're going down quite a bit. You can see here, July beans and all these things are really getting creamed. And so that'll set up some big stuff very shortly. Let me do these one at a time here. I wanted to do the wheat here to show you that's been relatively strong, from a point over the last few days. We had a big move down. You can see the ABC. Let's just draw it in so everybody can see it. So we're not going to surprise anyone. Your ABCD leg was right there, and it didn't quite make it. Let's see how close we came. I don't think I missed it by quite. Oh, just a minute. Something's wrong, folks. Oh, no. Froze up on me. Shut the front door. Razor, what's wrong? Come on, Larry. Come on. All right. I got to try something out. Let me go to the December corn, okay? As you can see here, we're getting down to heaven's door here. I call that the 1.618 number. There's a weekly on December corn, and it has been coming down. We're within 14 cents. So tomorrow when that report come out, this is going to be where the game will be played for the final, and last time would be my guess. So we'll have to wait and see what's going to happen here. But that should be really good support here, much like it was here. If you remember the low to the high, we never quite got to that 1.618. So support from there. We made the ABCD. We rallied a good, 30 cents, and then boom, down she came. And that means you have an ABCD coming in here probably tomorrow. There it is, even below there. So this will be the key area from my perspective to look. But folks, they're not going to stop eating corn. Okay, I know that for a fact. They're not going to stop eating beans. And if you look at these time frames here, you see here in June and July, we had this big rally here. That was a huge rally, okay? And then the previous year, back in here, there was a low, and it had another big rally. See, so it does have rallies. The question is, I don't think they're going to be as much as I had hoped for, because it looks very, very bearish from what they're saying from exports and stuff that Rich Anderson tells me about. That's about 9 levels over my pay grade. One that I wanted to show you on a long-term basis here. This is soybeans here today. You see we had this is over a 4-hour period. It's been coming down sharply. We're still going down. As we look at this on the long-term weekly, this is what I'm watching. These are the things we're going to be covering here for Friday. So this is what we're watching for possible. We might get we're already way under $10. We might even get under $9 down here. We haven't been this low in 7-8 years. And if we happen to get beans down about another $1 or so from where they are now, I think someone has to look at them, just if nothing else, to put beans in their garden. But anyway, that's what we're paying attention to here. And when the report comes out, what we usually do, we set a band, and we'll do that right before it happens, and then we're off the air before it comes on, and then people can decide whether they want to get it in or not. Even the meal, which had been holding up pretty well. Now this is the December meal. Get this up here. It also gave up the ghost. You see how it didn't stop here all the way down. Folks, I want you to do me a favor. You see this picture right here? All you got to do is go up here and change this from soybean meal to E-mini S&P, because it's what's coming, boys and girls. This is what's coming. And if you're ready for it, when you get that first 382 in the S&P, we had one today, worked pretty good, and we had another one right here. And so what we want to do is we want to get ready for that when we start to see it. Might even be today, might not be for a day or two, but the market is beginning to, for the first time, it's beginning to show itself as being a relatively, hard to get by here. So stay tuned. We've got Jeff Hughes in the house, and live every day in an attitude of gratitude, and may God bless.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly Gold Report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, and we have Jeff Hughes from Alpha Insights on the line, and I want to behold the bull market of 2024. Boy, this really shows that it's a one-way Corrigan for some stocks and not so good for others. Wow.
Thanks for having me on the show.
It's our pleasure having you back, yes.
For the sixth consecutive week, seventh this week, we've seen new highs in the S&P 500 and the NASDAQ 100, and they have been unconfirmed by the S&P Equal Weight, the Dow Industrials, the Dow Transports, the Dow Utilities, the Mid-Cap 400, the Russell 2000, the NYSE Composite, the Value Line Arithmetic or Geometric, or the MSCI All-Country World ex-US indexes. So none of the big, broad market indexes have confirmed these new highs. In fact, if you look back at the sectors of the 11 GICS sectors in the S&P 500, only 2 have confirmed the new high in the last week, and that is predictably tech and communications, right? And, of course, led by Apple, Microsoft, Avago, Meta, Google. Of course, NVIDIA has been kind of, down-ticked. It has not made a new high. But, we've seen intermarket non-confirmations like this in the past, and historically they're a bearish precondition that has tended to materialize in the weeks immediately preceding a major trend reversal. And, I think the year-to-date performance that we've seen in the S&P, which is up some 17.5% right now, it's just been driven by a handful of overhyped, overowned, overvalued mega-cap tech stocks, most notably NVIDIA, which is up some 160% year-to-date, and accounted for about a third of the S&P's year-to-date gains through last Friday.
Wow, that's amazing. 30%. Wow, one stock. Okay, now this is the you're looking at equal from 19. Oh God, this is. Oh my God, you really know how to break a man's heart. This is when I lost all my money.
Which slide are we looking at?
Yeah, we're looking at the equal weighted market cap, the blow off top that we had. That was
actually Hindenburg Omen we got the other day. Huh?
Yeah, Hindenburg. Yeah, and that June 24th, that people don't realize that thing went down a whole lot before everything. And then the high of that chart right there was August. No. This is 2024. But in August of 1973, August the 8th, was when Nixon resigned, and the market dropped 50% from August into December.
That's right. We've been following this ratio of equal weight to cap weight indexes for a long time, and I think that this really emphasizes the narrowness of the market's breadth. It's deviated sufficiently below this long-term trend that we put in there, and it now is very consistent with the narrow leadership that we saw at the blow-off market tops of January 73 and March of 2000. And, while the bulls are very optimistic that the market's participation is going to broaden out, and we're getting a big rally in the Russell today, to be sure, right, up 3.5% with the S&P down almost 1%. It's really not the way it's worked out in the past. Recall that back in from March of 2000 to October of 2000, we saw the then market leaders, not just the pets.coms of the world that, the bulls would have you believe, but the most profitable companies of all time, really, Microsoft, Cisco, Intel, and Dell. And those stocks dropped by 70 to 80%, taking the index down some 49% from its peak to trough. The same was true for the so-called Nifty 50 back in January of 1973 through December of 74. Recall Polaroid, Eastman Kodak, Sears, all lost about 90% of their value. By the way, all three of those companies have since gone bankrupt. So, I think that this is something to be concerned about, no doubt.
Okay, the next one is I don't understand what the words are on top, but I can see what the chart is telling us.
You don't remember your Latin then, huh?
No. I remember mea culpa, mea maxi mea culpa, and then when I got into confessional, I knew all that stuff. But other than that, I don't remember it.
Hic sunt dracones is Latin for here be dragons. The ancient cartographers used to print these words on the edge of the maps in order to try and elucidate the dangers of sailing into uncharted waters. And, when we view the volatility of the market, the VIX, through the lens of its ratio to the S&P. So we're looking at the ratio of the S&P to the VIX. We can really observe the true extent to which complacency has overwhelmed investor behavior. You just look at the VIX. I mean, it's a fixed downside, right? And it's a mean reverting index. This actually can show how the trend can break out. And, I guess the point here is that if you look back to 2009, 80% of the data points were range bound. They were in that kind of 100 to 260 range. And when they got materially above 260, it marked a peak. Volmageddon back in January of 2018, the COVID panic in February of 2020, the actual peak in the Russell 2000, which was in November of 2021, and then of course the Jan 22 tops in the S&P and the Dow, very close to that. But that really marked a real significant point of complacency and important market peaks. And of course, when you got down toward the low end of that, down to around 50, that tended to mark the bottoms, right? We saw the COVID crash and the Fed coming out with their printing. There was a flash crash back in 2015. There was obviously the post-GFC bailout, kept volatility kind of contained down there. I guess the point that we see now, and the problem as we see it, is that the bullish extreme that's being exhibited in this data series today now suggests that investors are actually more complacent toward risk of a market decline now than they were fearful of a market decline following the great financial crisis. And, it really emphasizes the fact that, portfolios are now short volatility to an unprecedented extreme, either outright or indirectly. And this, in our minds, really sets up a very dangerous situation for stocks.
Yeah. Do you know Bert Doman from Wellington Letter?
Yeah. I've read his stuff from time to time.
Yeah, he's been a friend of mine for years. He's issuing a all-out. He hasn't given a sell signal, but he said, "Get out of Dodge. Something bad's getting ready to happen based on the stuff he's looking at." So we'll move on to the next one.
In my opinion,
he's a pretty smart guy here. Now you've got this ratio here between the Nasdaq and the utilities. My goodness, this is stretched out quite a bit.
Yeah, Peter Eliades, who is the founder of Stock Market Cycles and has been, predicting tops and bottoms in the stock market for 50 years successfully. He developed this ratio and called it the speculative to conservative ratio. What it does is it takes the...
Got to pay a few bills, partner. Stay with us, okay? Yeah. Jeff Hughes, Alpha Insights. We'll be right back, folks. Stay with us.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're with Jeff Hughes, Alpha Insights, and we're looking at the chart of NVIDIA, and it certainly does look like it's getting ready to head south.
Wait, are we looking at the chart of NVIDIA?
Hold on just a second. Which one want me to get up? I can do another one here. Let's do the preferred Elliott wave, because this really looks like a wave 5 completing up here.
I don't think I put those charts in there.
No. What happened, Jeff? I didn't get your chart, so I'm using the ones from your letter.
Oh,
that's what I'm using.
Okay.
See, that's the problem that I had. So.
Well, I'm going to have to find my letter because I don't remember what those charts look like. So much has changed.
Hey man, but
I'm with you now. That NVIDIA chart. No, let's talk about NVIDIA. You know, it obviously looks like we put in 5 waves up to peak. Okay, I think back on the 18th or so of June, and since that time, it's come down in a sharp decline and rallied back just a partial, recovery. I think we've now recovered maybe upwards of 50%. But, today's sharp decline, and actually, Larry, we're seeing a massive decline among the Mag 7. I mean, Apple's down 2.5%, NVIDIA's down 5%, Tesla's down 6.5%. At the end of the day, I mean, I think we are definitely looking at something of a washout or the beginning of what could be a washout in some of these big stocks that have gotten really, really ahead of their skis. So with respect to NVIDIA, I think a breakdown below that key level that is highlighted with the neckline there, around 117.5 or so, a break below that level, I think would basically put in this top, and it would give us a countdown to about $76 or so.
Okay, the next one was the Elliott wave, which I don't really want to talk about that too much. But you had one about the short-term Elliott wave options that looked really interesting. It looked like it was making a wave 5 up there also. Do you remember that chart at all?
I do, and in fact, what I'll tell you today is we've actually squeaked out a slight new high above that. But today's new high looks like we're going to get a bearish reversal, key bearish reversal day. And so what that means is that the open was higher than yesterday's close, but where we're trading right now, down some 52 points on the S&P, we're below yesterday's open. And so if we close at or around where we're at today, that'll be a big bearish engulfing candle. And I think that key reversal indicates that we are probably putting in a top. If we didn't just make a top right now, there's just one more slight new high, but I would be betting we put in a top today, especially with the way the NASDAQ is trading down some 450 odd points. That to me is the beginning of something important. And my suspicion is, if we're right, this has topped out our preferred count, which is basically up to cycle degree, and we're going to get a very big correction. But the first leg of that correction should carry down to at least the 200-day moving average, which is around 4,900 right now. Woo! And if we break out that 4,900, we break below it, I think that confirms cycle wave 5, and we should be expecting a much, much deeper correction. And it wouldn't surprise me, especially given the seasonals right now. And I wanted to kind of point out that seasonally speaking, that factor is turning negative. So August, September, October are the 3 weakest months historically over the last 25 years or so. Sure. And we're coming right into that now.
Okay, on page 14, you have the internals of the market, how weak they are. And you've been talking about that for weeks and weeks, and it hasn't gotten any better, has it?
It really hasn't. Breadth just continues to look terrible. The 5-week moving average of breadth has turned negative after putting in a lower high, big negative divergence there. Momentum has been putting in lower highs really back since November of last year. Every month is a lower high, and so we've got like a quadruple negative divergence in place. And of course, up volume has really been less than half of total volume. That's not something that's consistent with the bull market. In fact, if we look at the 5-week moving average of up to down volume, it's actually down to like 0.8 now. And so anything below 1, it means that you've got negative up volume, or the ratio's negative. And typically a bull market, you'd be seeing 3 or 4 times up to down volume.
Okay, got one more chart and then we'll let you go. Yeah. But that's the investor sentiment is really pushing the limits, but it's not showing that with a lot of optimism, is it?
No, I'll tell you what, the name exposure index just went leveraged this past week, got up to 103%. If you take a look back in April, we got to 102%. In December, right before the January sell-off, we got up to about 101%. If we go all the way back to July of last year, it was 102%. Anytime you get leverage like that, it's basically everybody's all in. And I think right now the name exposure index is telling the story of professional investors. They are in a fear of missing out. There's a lot of career risk to miss a rally like this. Everybody's in and they're leveraged, trying to play catch up, and there's nobody left to buy at that point. All the money has been invested and then some, and so it typically marks at least an interim high in the market and would be very consistent with our analysis of the S&P putting in a top right now.
Jeff, here where I live in Tucson, the same young man has been washing my car for 30 years. He's now 45, he's 48 now. Anyway, he asked me for the first time, should he buy some crypto? And I said, I don't know anything about it. And he said, well, that's your business. I said, I still don't know anything about it. So I said, stay away from it. When somebody like that, it's like the shoeshine boy back in the 29s when they're asking questions about stuff they don't know anything about.
I agree, absolutely. The funny thing about crypto is Bitcoin, which was supposedly going to blast off because of the ETF that was launched this year, is nowhere near a new high. As the S&P and the NASDAQ have been making new highs, Bitcoin has been lagging dramatically and actually making, recent lows. And so I think that's pretty indicative of speculation collapsing. And so I think you're going to see more of the same there.
Folks, I don't know if you've seen his letter before, but by golly, if you haven't, you ought to go ask him about it, because these 45 pages, I could have you on for 2 hours and we wouldn't cover it all. This is really great stuff, Jeff. So thank you so much for being our guest.
The Huge Insights newsletter came out last Saturday. It's hugeinsights.substack.com. And, we publish it the first Saturday of every month. It's a very, very detailed narrative of what I think is going on from a big picture perspective, Larry. And, those who want to take a look at it, you can sign up for free on Substack, hugeinsights.substack.com.
Okay, that free means you get a double indemnity return if they're not happy, right? Double your money back. Hey, listen, buddy, happy holidays to you whenever the next one is, and may God bless, and we'll have you on in a couple of weeks. Okay, Jeff?
Sounds great, Larry. Take care. Thank you.
You bet. We'll be right back, boys and girls. Stay with us.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The stock market is a delicate interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee, so what are you waiting for? Don't let the market leave you in the dust.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I've put up the chart of the gold. This was one of the videos that I sent out early this morning to look to be a buyer of gold on this little 382 pullback here at 84. It got to 83, and then it exploded to the upside. And somebody has just rang the bell. We have a guest coming in. Let's see who it is. And the chart's not up. You know you're right, because I thought I didn't have enough time to do it, but I'll do it right now. Boy, my bad, Al. Sorry, pal. I hope we get all this done tomorrow so we can do it. Let's get up here. Anyway, there was the 382 right here. And, of course, you blow it up, you can see where it came from. Then we had the move up. We had another really good trade right here with a perfect ABCD right here. Remember, this is a chart or contract that trades for $250,000. It's just like the S&P, but it trades in more dollar volume. Well, today it's not. But anyway, we went from the number up here was 29. It backed off $13, but the secondary number came in right here. There was that 382 again, right on the money at 421. So we sold it at 421. Now our stop's at break even, and we're not going to risk anything. Right now it has a $3 profit. If it's right, it'll have a move down to this level right about here. So this is what we're doing. We have a chance to make $1,500 versus breaking even. Boy, if you can give me those all day long, I'll take them for sure. So that's the kind of trades that we'll be doing here on Friday during our live session that starts at 9 o'clock and goes to 12 on the 12th of July, and then also on the 26th. You get 6 hours of live trading. I always throw in some free books and some other information that's going on, but that's what we're paying close attention to as we're watching these things here unfold today. So just remember, we got a lot of volatility staring in our favor here down the road. So get ready, folks. This is not going to be for the faint of heart, that's for sure. So live every day in an attitude of gratitude, and may God bless. And I'll see you on the flip side tomorrow with Tom Harley as our guest. So may God bless.